So what's the most amount of money you've ever made on a deal?
$9 million.
$9 million in...
Well, I take that back. 50. I forgot.
What do you mean you forgot?
I haven't sold it yet, so I wasn't thinking about it. But if I think about it from an accounting point of view, it's on my balance sheet.
Do you think real estate is easy?
Real estate is really difficult or easy based on what your experience. By 2007, I was like, I'm the Houston version of Donald Trump. I've got this made. I'm so smart. And then 08, 09 hit. And I was like, wow, I'm a complete idiot. I went from being worth plus 10 million to like minus 50 million overnight.
You had a negative 50 million net worth.
Right. I was like, man, I wish I could be broke. Just being zero, that would be awesome.
What he did in 07 and 08, there needs to be a book written about it. He didn't want any of his LPs to lose money. When you file for bankruptcy, all of your investors get wiped out. He did the opposite. He went to his lender. He sold his personal properties, sold his cars, sold his houses, sold everything, put him back into the deals so his LPs didn't lose any money.
Just right here in the Houston market, there's between $300 and $400 billion with a B that's all coming due with debt service coverage ratios below a 1.0, which means that they can't make the payment when the loan comes up for refi. We're going to buy as many as we can.
Talk to me, Ian. What are we doing here?
I'm Ian, aka SSundee on YouTube. I've been making content for a really long time, made a good bit of money. With that money, as you know, I've done a lot of investing. Recently, I started getting into real estate investing. Hence, Trey sitting next to me. One of the best multifamily commercial operators, I would say, in the country.
Thank you.
Definitely in the state, maybe in the country. So I moved, packed up my family, went from South Carolina, moved down to Texas, started working with him full time. We are now business partners, own this company together. So that's, what we're doing here. And now you're here trying to mooch off of us. So
I literally heard about what they were doing and I was like, I need to go to Houston because they are buying up a ton of property at dirt cheap prices and they're making it wildly profitable. And you guys may know, I really want real estate. I want to make money in real estate. I want to have a bunch of real estate. That sounds really fun. Is it fun?
A lot of the time it's hard work. I will tell you what's fun right now. We have a deal under contract we're buying in foreclosure that one of my own employees, after he learned from me, he went out, he bought 3 apartment complexes. This is one of them. He sold this property for $95 a door. We're buying it from the bank who foreclosed on the owner after him. We're buying it for $47 a door.
What do you mean? So he sold it to someone, they were a bad operator and then it started to go downhill. Then it got foreclosed and you're buying it from the bank.
Right. For less than half of what my employee sold it for.
That's what I heard Ben Malla has done a lot in Florida is he'll buy up these properties and he'll improve them, basically put a bunch of tenants in them, get maximum occupancy to where it's a very stable asset, and then he'll sell it. And then the new owner will end up messing up and then Ben will end up rebuying it. Yep. And so you can kind of just like cycle through the same property over and over and over again.
Yes. And not only that, but I actually have another one of the properties that I sold down in a submarket called Pasadena, where I actually grew up on the south side of Houston. It just became available. I haven't even told you about it yet.
Oh, great.
And this property is available for way less than what I sold it for. Same thing. They screwed it up. One of my buddies, John Quinlan, he's actually bought and sold the same property 3 times now.
How much money has he made buying and selling the same property 3 times?
I mean, I think each time, at least a couple million every time.
So obviously, that's a pretty insane number. And when I heard about the other numbers that these guys are playing around with, I mean, YouTube money is one thing. Real estate money is another thing. So congratulations to you guys, because that's pretty insane. So I got to know your background in real estate. You retired at 35 years old, and then you just decided to get back into the game because you started getting bored with retirement.
Yeah, my kids got older, and it was really fun when I could be a part of everything in their lives all day those first 5 years. Then they started school. It was like, what happened? What am I doing? Mm-hmm. And so increasingly, you start wondering, what did I retire for? Like, what's next? And just felt like at the same time that was happening, I saw all these people losing their properties right and left in this huge interest rate squeeze since the rates shot up to more than double what they were before. So I saw, wow, these properties are coming back around that I already made millions of dollars off of, and they're available for less than half of what I sold them for.
So the idea of this podcast is basically in exchange for me helping them out with the podcast and helping out with the flow of the conversation, they're going to be improving my education in real estate. So that's basically what the trade-off is. I got to know, how did you retire at 35?
I started out growing up in a working class, blue collar neighborhood. So I wasn't looking to, have a private jet or anything like that. But I had a goal that if I could make $100,000 a year from real estate passively, just as an investor, that I would kind of just stop and smell the roses and enjoy life. And when it got to a point where I was making that every couple of weeks, I kind of thought, all right, at some point, enough has got to be enough. And, at the same time, I had kids for the first time. I became a dad. and I had twins. And I didn't really have that opportunity of having my dad around a lot when I was young. So I thought, I don't want to have that same experience for my kids. And I maybe overcompensated a bit, but I said, I don't need more money, but I'm never going to get this time back while my kids are small. So I just stopped. I sold everything. I kept one large property that's 10 minutes from my house. I've owned it 20 years. I have no investors in it. It's 488 units. You're going to go walk it with me tomorrow and see what I've done at that property. I bought that property for $20 million. Now it's worth $70 million. So, that deal alone has been enough to put me in a great financial position, not to mention the thousands of other units that I repositioned and sold for a profit.
Okay. So Ian, how much real estate do you own?
Right now I own around 55 doors, and then I own a mobile home park, and then I'm on LP, which is a LP, what is
Limited
it?
partner.
Limited partner with one of his deals. And then we're under contract for 2 other apartment complexes.
Okay.
I love it when you say limited partner, Ian, because I don't think anyone can limit you. You're at the property more than I am. So I don't know how limited you really are, but you're very involved.
I'm curious. And then how much do the 55 units make?
Right now, it's early stage. We just invested in them. We have 2 properties that are duplexes, and they're bringing in revenue around, I would say, $5,000 a month on the duplexes.
Oh, wow.
And then my house that I bought 10 years ago, we rent that out for around $2,000 to $3,000 a month. It's more so we're playing the long appreciation game rather than the short cash flow game.
Sure.
Hold on to the real estate while it appreciates and sell it later.
Okay, so we're going to get on to some very awkward questions. I'm curious, when did you become a millionaire?
When I was 27.
27?
Yes, sir.
So how did you become a millionaire at 27? Because that's okay, I guess taxes probably didn't really affect you because you were investing in real estate.
Yeah, I don't really pay any taxes.
When's the last time you paid tax?
I don't remember.
You don't
Definitely more than at least 10, 15 years. I mean,
you haven't paid tax in 10 or 15 years?
Right.
So how much do you have in losses that you just carry through every year?
I know I have a carry forward net operating loss right now because of all the depreciation.
Yeah.
That's well over $10 million.
So you basically can make another 10 million and still not pay any tax.
Correct. But that's just right now. By next year, it'll be bigger. It just keeps going up every year.
Why do you think real estate investors get away with not paying any tax? Is it literally because, I know the whole bonus depreciation thing, people speculate that Trump, he was massive in real estate. All of his real estate buddies that he probably have, they could have lobbied him to provide a bunch of tax incentives for real estate investors. Why do you think they let real estate investors get away with paying zero tax?
Well, all of our tax laws are written by our legislature, and they're also written by our appointed, officials. And if you go all the way back to the founding of America, the founding fathers, what do they all own a lot of?
Real estate?
So I don't know about you, but I generally find that human beings kind of do what's in their own self-interest. And so what I find is that if all of our legislators have, and still do to this day, own massive amounts of real estate, they probably write the tax laws to benefit themselves. So why not join them if you can't beat them?
Once I started really looking into the amount of tax benefit that comes alongside real estate ownership and being a real estate professional, it's insane. Insane. We had Carlton Dennis on the podcast, and he's like basically a tax person. And he was telling me about some of these strategies that real estate investors use to make hundreds of millions of dollars and never pay a single cent in tax.
Well, kind of a fun story on that. So Ian CPA, just today, sent over an email wanting a little bit more info on this new deal that we're buying. And we were looking at a smaller deal. We're looking at what would his end of the depreciation be that would be above and beyond any income from the property, meaning this is tax shelter that he could have against his other income from YouTube. Mm-hmm. And it was over $3 million per year.
Yeah, I don't. I just follow his lead, and he tells me things. And I'm like, all right, cool, I'm in.
So when did you become a millionaire, Ian?
Oh, God, I would say 2013 is when I started doing YouTube full time. I would say about 2 years after that. So 2013, 2015, 10 years ago. So 27.
27, same.
That's crazy.
The 27 club. There you go.
27, I would say, about a millionaire. Yeah.
Okay.
And now we're still the same age, right? Oh, no.
27.
Not quite.
Do you think real estate is easy? I really want to invest more in real estate as it's extremely apparent. But every single time I do, I feel like I get hung up on the simplest of things that appear to be so complicated for me.
I think real estate is really difficult or easy based on what's your experience. So when I first started, I remember doing my first ever apartment deal. With houses, it was always pretty easy. But when I switched over to doing apartments, the first one, man, I just felt like I was so lost, and I did everything the hard way. At the time, I didn't know that was the hard way. I was just trying to figure it out. But the real estate deals themselves are so easy for me now because I've been doing them a long time. And I think really it's the basic concept that if you give residents a great experience and you make it better than the previous owner, you're going to add value and make money.
I feel like that's an oversimplification of the reality of investing in real estate. Even for me, like even just closing on a property can be a massive pain in the butt with like inspections, due diligence, whole escrow period. Like all of that stuff is like still confusing to me after buying 2 places. I still am completely confused.
Right,
and so
bro,
do you think
you said 2? Remember how I said experience? That's why.
Do you think you have
by
to,
10, you'll be like, oh, this
do
is
you think you have to be intelligent to be a successful real estate investor?
I would say yes. I mean, you have to know the numbers. Like you're a genius when it comes to underwriting. If you weren't a genius when it comes to underwriting, you would lose a lot of deals without a doubt. And I know you're going to say it's basic math, but I think it's a little bit more involved than that. And that's why you are successful at what you do, because if it was just basic math, there'd be more successful people at it, but they're simply not.
I think it just depends on how you look at it. Let's just say that I think the way that you grow has a lot to do with who you surround yourself with. And one of the things I've seen about you, Jack, is that you surround yourself with a lot of really smart people from a lot of different areas of life.
Are you patting yourself on the back right now?
I mean, hey, I'd like to be one of them. I'm not saying I'm part of that group, but I'd like to be.
I'll take it.
All right, maybe Ian will take it. But as you learn from people that have been successful at, I think, just about anything, it's a lot easier to become successful, right? I'm sitting here with you today. I'm sitting here with Ian. You've got millions of subscribers on YouTube. Ian has millions of subscribers on YouTube. I barely know what YouTube is, but probably it's going to be easier for me to grow in that space being around guys like you than if I was doing it on my own. And that's the same thing about real estate. And I think for people that have the expectation that you do 1 or 2 deals, you know everything about it, it's really hard. But if you go into it humbly and expect it's going to take time and repetition to kind of get it down, then I think you'll find you wake up one day and you're not faking it anymore. You actually know what you're doing. And it feels like, oh, this was so simple, but it does take, like anything else, practice. So
at what point in investing in real estate do you feel like the switch flipped for you, where you're like, okay, like, I'm starting to make actual real money? Like you could be making, 6 figures after making like 2-3K a month, I'm sure, off your first few deals.
Yeah. I mean, I think when I started off, it was a single family in college, buying my first property, no money down from a college professor. And that was in like the mid 90s. And I really thought by 2007, that I was like a genius. I was like, I'm the Houston version of Donald Trump. I've got this made. I'm so smart. And then 08, 09 hit. I was like, wow, I'm a complete idiot. I went from being worth, like plus 10 million to like minus 50 million.
How old were you?
Overnight. Oh gosh. I guess I was in my late 20s.
You were in your late 20s worth over $10 million?
Yes.
And then you were worth what after the crash?
Minus 50 million, roughly.
You had a negative 50 million net worth.
Right. I was like, man, I wish I could be broke. Just being zero, that would be awesome. But I was like minus 50 million in net worth.
And did you get the notes called on you?
No, I actually managed to proactively approach my lender and I raised new capital. And I also bought new deals at a fraction of the price during that crash. And I took every penny of fees that I made in those new deals and dumped it into the deals that I had done before. So I was able to renegotiate all my debt. And my lender loved me for it. They said I was the most proactive borrower in America. But it was a painful and scary time, to say the least.
So what was the main thing you learned from that experience?
The main thing I learned was that when you buy deals, there's a couple of basic principles. Number one, you got to know where you are in the cycle. So if you're fighting the market and you think you're smarter than the market, you're not. No one really is.
What do you mean by that?
Well, because there's historical data that's readily available at these properties to see, are these properties trading at a price that's the highest they've ever traded at, like they were, by the way, when I first started buying apartments and didn't know any better? Or are they trading historically at maybe half what they traded at before in the past, like they are right now? And that's just comparable data that you can purchase through a dozen different companies that sell this data. So for example, the one that we subscribe to costs us about $500 a month, and we get access to all that data. It's actually through a company called RealPage, and they make a lot of different property management software, tools for brokers, as well as operators of real estate. We've also subscribed to several other different services over the years. So there's lots of them that are out there. And every real estate broker subscribed to this service. So a lot of times they'll give you that data for free if you're their client trying to buy property.
So you've technically made everything that you've made for your net worth right now plus 50 million, because you got out of a hole of $50 million.
Yeah, I mean, I had to kind of work my way out of it. It's a lot of the market right then was trading on non-arm's length transactions. Nobody was selling if they didn't want to be a seller. They were selling because they were forced to be a seller. So stuff was selling for literally pennies on the dollar in 08, 09. And then now as those prices all bounced back, like they do in every cycle, they hit an even higher number than they were in the previous high.
Why didn't you just file for bankruptcy?
So let me talk on that. Okay. So he doesn't like bringing himself up or talking about himself. What he did in '07 and '08, there needs to be a book written about it. He didn't want any of his LPs to lose money. Any other syndicator would do what you just said, file for bankruptcy. When you file for bankruptcy, all of your investors get wiped out in most cases. He did the opposite. He went to his lender. He kissed the ring, bent the knee, sold his personal property, sold his cars, sold his houses, sold everything, put him back into the deals, sold ownership in his deals so his LPs didn't lose any money. He was in a rough spot, so his LPs and his investors lost nothing. That's what he did during that time frame to rebuild himself back up. Most other people would have did what you just said. They would have filed for bankruptcy.
Do the LPs, do they still invest with you?
A lot of them do, that are the ones that are still alive. I've been doing this 26 years. So I've got investors that were, in their 60s, 70s, and 80s that were investing with me back when I first started that unfortunately have passed away. However, quite a few of them going all the way back to the early 2000s are still investing with me now. If they were one of the younger ones that were in their maybe 40s or 50s and they're still, around now, they do want to reinvest with me because I made them a lot of money. Sadly, for a lot of them, they actually reinvested when I was retired with some of the new kind of up and coming syndicators that have come along since then. And now a lot of those deals are upside down. So now they're actually reinvesting with me and Ian to dollar cost average and buy back in at a lower cost basis so they can bring down their overall break-even point because they bought in when they shouldn't have at the high of the market. One of the reasons it made it so easy for me to retire, Jack, is I looked at the prices at that time and it was just so obvious. It was a ridiculous seller's market. So why not take advantage of that and be a seller, not a buyer? But kind of like me back in 04, 05, 06, 07, when I was buying apartments and didn't know that I was going into a peak because I was new. A lot of these guys didn't know that. So they came in and bought those properties at the peak and now they're upside down. The thing that is kind of the second biggest key, I mentioned I learned a couple of things. The other one was I learned the hard way, always use long-term fixed interest rate debt. The vast majority of the deals right now in the market that are coming up for foreclosure that we're buying at a huge discount, this is happening because these guys not only maybe overpaid at the top of the market, but they got these loans where the interest rate floats. So when they got the loan, the rates were 2 or 3%. Now they're having to pay 6 or 7% on that property, and they got the max loan they could get at that 2 or 3%. So you can imagine now, can the property support the same amount of debt at over 2 times the interest rate in today's market? No. So when they're having to refinance those loans, there's no way to refinance them without bringing millions of dollars to the table to pay those loans down that they don't have. So that forces them to sell these deals at a huge discount. And that's always been the case. The market goes up and everybody gets irrationally exuberant. They overpay, they over leverage, and they oversell. And then they wind up being upside down when the next market comes along. And really, you make your money when you buy by buying at the bottom. One of the worst operators that I've ever met is also one of the wealthiest operators I've ever met, because while he's not the best operator, he is an incredible disciplined investor. Every time everybody's scared to death and the market is sinking really low, he buys and buys and buys and buys. And every time it shoots up and looks like it's got a long way to go and everybody thinks he'd be crazy to sell, he's very disciplined about selling.
So in terms of today's market, would you say that we're right now, strike while the iron is hot, this is the opportunity? Or do you think it's going to continue to get worse and there will be more opportunity in the future?
Kind of like selling. You don't want to try to sell when you think you're at the absolute peak of the market because you're going to miss it. The same thing is true now. I believe and hope it's going to get a little bit worse than where it is today, but you want to buy into that dip. So we're already at maybe, let's say, anywhere from 30 to 50% discounts in the deals that I've been looking at from what they previously traded at. On some of the ones I'm getting, it's probably closer to 50. If you're more of a newbie, don't have the same relationships and credibility that I do in the market, maybe you're only going to get a 30% discount. I mean, boo-hoo, it's still a 30% discount.
Mm-hmm.
As soon as the market rebounds, you're in a great position. So we're absolutely already in that buyer's market today. I think that's going to get even more so. We have $300 or $400 billion, according to TREP, which is a data service that we subscribe to. You asked earlier about data services. It's TREPP.com. Anybody can subscribe to it. You don't have to be some kind of licensed broker, anything like that. Just right here in the Houston market where we operate, which is the largest apartment market in America, there's between $300 and $400 billion with a B that's all coming due with debt service coverage ratios below a 1.0. Which means that they can't make the payment when the loan comes up for refi.
Mm-hmm.
We're going to buy as many of them as we can.
So speaking of bad investors, what's the worst investment you've ever made?
You want to go first?
Oh, gosh. Oh, man. I invested in a YouTube competitor
Oh, nice. I mean, I guess that's hedging your bet, right? Like that's being a diversified investor.
I like YouTube, but I was like, you know what? YouTube needs some competition. I mean, this was 8 years ago. Let me throw some money at this. Lost all of it.
How much did you lose?
100 grand.
100 grand. How fast was that?
I would say half a year. Just gone.
How'd that feel?
It's not good.
Did you learn anything from it? You still seem to be a pretty loose investor.
I learned to vet people a little bit more before throwing money at things and trust my gut more. My gut at the time was saying, hey, don't do this. YouTube's too big. Don't do it. This guy, he's a really nice guy, but he may not be able to turn this thing around. He's fighting, he's David fighting a Goliath at that point. I shouldn't have done it. But now, vetting Trey, looking into Trey, realizing he's the real deal. I've invested in incubator company, a franchise incubator company where they, take franchises and they do their thing on them and make the franchises very profitable. And then they put it under their umbrella and they just build up their portfolio.
Losing 100 grand, honestly, isn't that bad. At least you probably had a good amount of money still at that point. I didn't have very much money and I lost 70 grand one time. This is the famous Jack Robin Hood story. I just basically had a Robin Hood portfolio. I absolutely blew up because I thought that I was a smart investor. And the reality was I was not.
What'd you invest in?
I had a lot of Palantir and I had a lot of Robin Hood stock, which both, of course, exploded and did incredibly, incredibly well over the long term. I just timed it incorrectly. And I had a lot of buying call options, which is not what you should be doing. If you do want to do options, I always recommend, not that this is financial advice or anything, sell the options. That is the equivalent of being the casino as opposed to being the gambler. So yeah, I basically bought a bunch of call options and got burnt. Margin called, had to sell everything.
Oof.
Lost my entire portfolio. So it's fine. It's okay, guys.
What was the percentage of your net worth in that?
I mean, it was more than 10% of my net worth. Probably 15% of my net worth just wiped out from my stupid Robinhood trading.
Okay, so before Trey gives his answer, I've lost, at least $1 million in bad deals, right? I start a company, it doesn't work, and it takes capital to get going. You've lost 70 grand. His worst deal, he still made $1 million. Go ahead.
It was only $500,000, but the amount of work.
His worst deal, and he still made money.
Well, look, I bought this mall. And it was where I grew up. And I felt like I could turn it around. It was kind of sad. I remember my girlfriend worked there in high school. There's a little clothing boutique called 579. I remember as a kid going there, sitting on Santa's lap and, giving your Christmas list, all that kind of stuff. So we made a deal and I bought the property and I bought it for less than what it appraised for. And I thought, man, I'm so smart. I'm going to make a ton of money here. That wound up being more of a labor of love, trying to turn that thing around, which I did do. I renovated it, made it much nicer, increased the occupancy, I think kind of revitalized that facility for the community. But in terms of the returns, I think I spent as much time on that deal as I would have 10 apartment deals. It was right at the time that people were becoming aware, which I know it sounds just idiotic. Why would you buy an interior retail mall? I had a Sears and the food court and all that good stuff. You're like, duh, Amazon. But this was, years ago before people had kind of seen that coming, but it started to happen during my ownership period. So all of a sudden cap rates were shifting for malls, occupancy rates were shifting for malls, and the buyer market was just evaporating overnight. So luckily I got out of the thing and, wound up making maybe $500,000, but the amount of time that went into that relative to the, probably 20 or 30 million I could have made at least doing apartment deals with a fraction of that effort, never again. And I just kind of realized with my properties, I usually compete with slumlords. I'm not very sophisticated. When you buy a mall, you're competing with Jeff Bezos, and no thank you.
How do you recommend people get started with real estate in 2025? If you've never invested in real estate ever before, I know it's really, really challenging because you probably can't get started with a commercial property. You probably have to buy a single family home and rates are high. Affordability is extremely low. What would you recommend doing?
I would recommend with single family, like you said. I think that's the best way to start if you're, the normal person. I would invest a lot of time before money. Learn everything you can. Watch all the YouTube videos. Watch all the people that have been doing it for a while. Don't watch the gurus. Watch the people that are doing it, actively doing it, not teaching, right?
So that's interesting because the general philosophy for starting in business and pursuing things in life is when you're a beginner, you can fail. And so you should do before you think. And then eventually it gets to the point where you need to think more than you do, which is like once you've acquired enough assets, enough capital, you have businesses, then your thinking matters a whole lot more than the actual doing, because the doing can unravel all of that progress. Whereas in the beginning, you could buy something, fail, mess up. It's okay. Try out this business idea. Don't overthink everything, because you're not going to learn anything from thinking. You're not actually progressing. You're just kind of treading water. But then again, if you get into a piece of real estate and you don't have any idea what you're doing, it can mess you up.
Yeah, it can bankrupt you. It can bankrupt you. It can, not only does it hurt you, but if you put a tenant in there, you're mistreating them. You're not upgrading their stuff. You're not giving them high quality of life. It's affecting more than one person. That's why I'm a little bit more cautious on the real estate side. Learn more before you do. If you're starting a YouTube channel, have at it. So do it before you learn a thing.
What do you do if you live in a medium cost of living or a high cost of living area? Maybe you've saved up 50 grand and you probably make, let's just say 60 to 100 grand a year. What do you do to get into real estate?
So I stumbled into real estate because the mentor that I found happened to be in real estate and was willing to take me by the hand and show me how to do it. So I think that person starting out, look at your circle or look outside your circle. Who could you find and bring into your circle or join theirs that's already had some success?
So what's the most amount of money you've ever made on a deal?
$9 million.
$9 million in...
Well, I take that back. 50. I forgot.
What do you mean you forgot? How do you forget you made $50 million in one deal?
Million.
Like, oh yeah, you know, the most amount of money I made in a day is $20. Oh wait, no, sorry, it's 20 million. It's like that. There's no.
You know, I haven't sold it yet, so I wasn't thinking about it. But if I think about it from an accounting point of view, it's on my balance sheet, so I have that equity.
So that's the one big deal that you have that you've been holding on, that you retired off of. You basically bought it for 30 million. Now it's what, 80 million or something?
Bought it for 20. Now it's worth over 70.
See, you appear to be living the actual dream life, which is you have one complex with how many units?
488.
And you pay probably zero taxes on any of that. So
Right.
that's actually how much money you have in your pocket to spend every single month.
Right.
That just doesn't add up. Nothing about that makes any sense to me.
I mean, I've owned it 20 years, if that helps.
And so where did most of the value add come from? Was it improvements you've made to the property, or was it just the increase of value of time over time?
I think you're going to see it when you visit the property with me tomorrow. When you walk around my property, you look at what I've done with it, just how clean it is, how efficiently everything operates. When you talk to the staff and you see the clarity of mission, everybody is very, very clear because I'm so hands-on about what the expectations are. All the minutia is done exactly perfectly.
Do you have any debt on the property?
I do.
How much debt do you have on it?
So currently I have about a $30 million loan, but I've taken a lot of money out of that deal over the years.
To put into what?
I bought a really nice house from the center for the Houston Rockets before he left for Atlanta when he got traded. Bought a beautiful ranch, a multi-million-dollar ranch out in the hill country as well. And I've had my share of a couple of boats, a couple of McLarens, Lambo, a few things like that to have a little fun.
Well, you also pull money out and put it back into the complex too.
Right. A lot of the money I've put back into further increasing value. And the reality is I could probably get more than the 70, which was the last offer I had. I haven't had it on the market in a long time.
So at what price point does something have to be for you to consider whether or not you're going to buy it? Like if you want to buy a nice watch or if you want to buy a nice meal, like do you look, a lot of people, they read right to left when it comes to reading a menu. I imagine you do not do that.
Not so much, yeah.
So,
I don't want to sound like a douche, so I'm not really sure how to answer you other than to say that
the thing is,
I don't really think about the price.
But it doesn't matter because here's the thing. A lot of people will be douchebags online, but they will be lying through their teeth. And so you can be honest and answer the questions that people that don't get a chance to speak or hear from people like you in an honest fashion. Like, what is it? I mean, do you read right to left? At what price point do you start to consider the cost of a good?
I mean, I think if I were thinking about like something that's going to cost millions of dollars, I'm going to think about it very carefully. But if we're talking about like anything in day-to-day life, I don't really look at prices. But then again, I don't buy a lot of stuff anymore.
Sure, but what about for your family? I imagine your wife wants to go get a nice purse. She may want to go spend money on something, right?
Yeah, I mean, on that one, we kind of have a rule, like she can go buy kind of whatever she wants that's like not super expensive.
So what is super expensive?
But then whenever her gifts come around, I can get her all that expensive stuff that maybe she would not buy for herself.
So what is super expensive?
I mean, if she goes and buys a purse, maybe she'll spend up to like $1,000 or something if she was getting something that's just kind of for every day.
Mm-hmm.
But when I'm getting her stuff that's like, all the high-end brands, those are things that we kind of reserve for, birthday, anniversary, Valentine's, Christmas, all that stuff.
Do you check your credit card statements?
My assistant does.
What about your children? How do you make sure that
they don't check the credit card statements? No.
that they don't grow up, in a spoiled household? I'm sure a lot of people are extremely concerned. This is so out of touch. A lot of people are extremely concerned if they make a lot of money that their kids are going to be. Probably people aren't extremely concerned about that.
Right.
But how do you prevent your kids from becoming spoiled, growing up in a house that's probably worth millions of dollars with with parents that earn as much as you guys do?
I think it's just all about how you raise them, right? Like I have a 16-year-old, a 5-year-old, and a 2-year-old. They understand that. Well, my 16-year-old understands that dad makes decent income, right? 5-year-old and 2-year-old not so much. But you can see the 5-year-old from now, time and time again. You see him. Send out little messages. Hey, mom, go get me some food because I demand it. Stuff like that. We hired a house cleaner to help us with the house, and he'll say something when she's not around. They're like, "Wait, what did you just say?" You don't talk like that to people.
Your child's like, "Is the help gonna clean that up today?" You're like, we do not. We don't even call them the help. Why are you calling?
So he'll drop something on the floor. Mom, pick this up. Who are you talking to? It's all about how you raise them. If you see little glimpses of that starting to change who they are, you got to stop it.
Jump on that.
With a brick wall.
Yeah.
That is, it's just how you raise them, right? And, I know Trey does the same thing, So
Trey, how old are your children?
So they're 10.
Okay. So they don't have cars yet?
No. But, what I tell them is I say, look, we've done well. You're broke. You have nothing. I tell them that.
Brokey?
I tell them, like, when you get out of college...
You're poor.
I tell them right away, like, you're not going to have this lifestyle. You're going to be broke and you're going to... I said that. I said, you're going to be poor. I say, but if you work your ass off and you save money and you invest it, then someday you won't be. So, like, for example, if they get straight A's on the report card, they get $75. But part of our agreement is that they have to set a portion of that aside. And I have those little, bank bags you can get that are kind of like with the little zipper on top. Mm-hmm. And they take a portion of that report card money, which I intentionally give to them in cash so they can see how much they put in there. And I try to negotiate with them because I'm trying to get them to put a larger and larger portion of their $75 in that, bank bag. And my son always wants to use it to buy, I guess they're called, is it Robux or whatever you use to buy stuff on Roblox, which I just think is the most amazing waste of money imaginable. Mm-hmm. But he wants that. My daughter, of course, wants to go to the mall or go to Target. And so I try to get them to always set that aside. And so now they're pretty good about it, where they kind of they know that they're putting that money aside, because if they keep doing that, even when they get a paycheck, they could tell you if you sat there and asked them, they know that if you don't set aside a portion of what you make all the time and save it and one day invest it, then you're always going to be poor. And that's what I teach them. And because I grew up poor, I grew up not really having the cool stuff that other kids at school had. And so I want them to know when they get money, the first thing they do is take some of it, put it aside.
Do you think if you're broke between the ages of 25 and 35 in America today, it's your fault?
That's not necessarily.
So elaborate.
I have tenants that, when I buy the property, they get involved as runners or 8 or 9 years old, kind of running drugs and money back and forth between cars and trap houses at that property. They've got people in their immediate family and community that are heavily involved in, gangs and drugs and human trafficking. Some of them also themselves get trafficked, at a very young age. And so I've witnessed that up front. And I don't think these kids really have kind of the same opportunity as somebody who grows up in a stable household and is being taught values and getting money for straight A's on the report card. You're going to save a portion of that, right? That's a totally different situation. A lot of them have face tattoos, before they are over 18. They've already gotten busted for numerous things as a juvenile, and their social circle is one that they almost have to maintain a certain image, because otherwise they worry that they would get killed or they would get hurt. And so I think people who grew up in these really low income neighborhoods, and of course we try to correct that when we buy these properties, but they don't have the same opportunities that the rest of us do.
Let's talk about getting started investing in commercial real estate. This is something that I've wanted to do for a very, very, very long time now. I'm curious, if you were in my shoes, let's say that I was able to somehow find some money. Okay, like I sold out of my stock, basically. That sounded sketchy. Find some money. Yeah, I sold out of my stock and I had a little bit of money to be able to buy my first commercial property. How would you go about doing it? Is LoopNet, where a lot of people look for commercial properties, even worth scouring these days?
I would say yes and no. LoopNet is a good learning tool. You can figure out what the industry is doing, what it looks like. Good learning tool. If you're willing to call LoopNet sellers and negotiate, then you can find a good deal, I think. But most time, that's where deals go to die. Your deals are all found mostly off market based on your relationships with brokers. They bring you stuff off market. Once you get deeper in, that's where most deals come from, is off market.
Mm-hmm.
But LoopNet, that's where I started to learn. Figure it out.
That's where Ben Mulla finds all of his deals at this point. He just has relationships with people and they know, okay, this place needs help. It needs to be purchased by someone else who's going to take care of it, increase the value. They just call Ben.
Yep.
So where would you say, if you were me and I wanted to get started in commercial real estate, what would you do? Or would you not get involved in commercial real estate because maybe it makes more sense for me? My ROI is a lot higher. Maybe, doing some more consulting or focusing on getting another brand deal in the iced coffee hour.
Personally, I tell people if you are not accredited, meaning that you have a net worth of less than $1 million, excluding your primary residence, then you should probably start off in single family. If they are accredited, then I tell them, do what I did. Go invest as a passive limited partner in a deal. That's how I started. And learn from that person that you're investing with how they do things and follow them around like I did, like a lost puppy, trying to figure out, how do you staff this place? How do you renovate this place? How do you turn it around? How do you do the accounting? And you'd be surprised how many commercial real estate investors don't expect people to actually take an interest in what they do. We live kind of a lonely life sometimes putting these deals together while our LPs are out there being, dentists and doctors and lawyers and YouTubers and whatever they do. They don't really have a lot of interest. Half the time, they don't even read the quarterly reporting when it comes out. About the only thing they ever do is look for distributions in the mail.
So how did you become an LP in the beginning then? How much money did you put into the project and how much did you get out?
So my first deal ever, I think all I could scrape together was maybe about $25,000.
How'd you come up with that?
So I borrowed about half of it from friends and the rest of it I had saved. And I had a couple of a few rent houses already under my belt. And I also rounded up money from other investors to also go into that deal with that guy. So between me and other people that I, kind of put together, I was able to help him raise a couple of $100,000. So he let me in for below his minimum just to get involved in that first deal. And I think I really annoyed the ever living crap out of him. Now he thinks it's hilarious that he has pictures of me like power washing the sidewalk in front of the leasing office the day that we closed and climbing up on ladders with CB Johnson, our roofer, even in the rain when it was lightning. And he was like, "You're crazy for going up there." I'm like, "Well, how am I going to know anything about roofing if I don't go up there?" And so I really kind of seized that opportunity to get in and learn from him. But, everybody could go out there and look in their circle and find out somebody that's successful in real estate. You'd be surprised how many people are quiet real estate investors.
So how much did you make from that initial 12.5 investment?
So I want to say, I know I paid back the folks that lent me the money, and I think I made like 3 times my money, something like that in the end. Because I remember seeing those updates for the overall partnership when we exited. Now we owned the property, I want to say, for maybe like 12 years. So it took some time.
Oh, wow. And how long then until you actually raised money for your own first deal?
6 months.
So you immediately saw what he did. You're like, okay, I think I get it. And then you decided to ask those exact same people you raised for this other guy's project for your own project.
Well, I found new people and some people that were in that one. So it was a combination of the two.
And then how did that first deal that you raised capital for do?
It did very well. We actually returned 100% of the investment in the first 18 months from refinancing the property after I increased the value, and then went in and doubled that again, in ensuing years.
That's so walk me through the numbers. How much did you pay for it and how much was it worth in the end?
I'm kind of going to have to tell you, this was a very long time ago. This was 2004. I do remember I paid, I think, for the units around $26,000 a door. Is for Clearbrook Apartments at 4000 West 34th Street. Eventually wound up selling that property to a guy named Gary Gray. I want to say he paid me something like maybe $75,000 a door. And I know there's a deal down the street that Gary did that was built around the same time that he renovated that recently traded for $180,000 a door.
So how much in real estate have you sold then?
A couple of $100 million.
Would you have been better off just holding on to your assets instead of trading them?
100%.
And so this is what I hear from literally everybody. Literally everybody. They would have all been better off had they just held on to their assets. Time and time again, whether it's with stocks, equities, real estate, businesses, most of the time, if you build something up, just holding on to that asset over time is better than selling it. If you could go back in time, would you have held, or do you think that that would have been too much of a pain in the butt? You enjoyed retiring at 35?
So my friends that are very wealthy and they come from families that have multi-generational wealth, that's exactly what they do. They own these properties for what feels like forever. And a lot of time for them, it's almost like a covered land play. They want to buy deals that are going to cash flow, go up in value in areas that are going to be continuing to be developed and grow up in value so that even if someday the building becomes functionally obsolescent, the land value underneath has got tremendous long-term growth potential. But for folks like me, where I come from a low income neighborhood, I really didn't have money. My parents didn't give me any money to go buy deals. I had to go out and, scrounge and save and see what I could do to add value to the deals and then get people to see that I was doing that and pay me to do it. I'm having to work off partnerships. And when you work in partnerships, what you find is that people's lives change really fast. So you've got to be able to get out of the deal before they all get deal fatigue from things like being relocated, death, divorce. People just go through changes in their life. And if you're, as a partnership leader, not anticipating that you're going to need to buy this property, deliver a certain return, and then exit, then you're probably unwise and haven't been doing it for very long. You're not going to want to try to keep the same group of people together that made sense today, maybe 20 years from now. That's just not realistic. So it depends on whether or not it's all your own money. The property I've owned, we talked about earlier, for 20 years, I have no partners. So there's nobody pushing me to sell.
Would you say having more money has made you happier?
It all comes down to who you are as a person, right? If you're a person that wants to help the world, I think you can see a lot of fulfillment from having money. Whereas people that are more self-centered, money kind of does the opposite. They realize that, hey, I've bought everything. Why do I still feel like crap? Because you're not helping. And that's where I've found the most fulfillment is helping a lot of other people, buying people houses, setting up, rehab centers, drug facilities, drug rehab centers, helping people across the seas with human trafficking, just helping, doing things to make the world a better place. For me, that's made me happier. Now, if I didn't have money, could I find ways to do similar things on a smaller scale with sweat equity? Sure. But, I'm playing the cards that I was given.
So obviously life does get better as you make more money, but at a certain income, it starts to kind of diminish, like the law of diminishing returns. Where would you say that inflection point is? At what income does it really not improve your life to a reasonable amount?
I mean, I don't think we're there.
Really?
No.
Because I've heard a lot of people, like, obviously the old number was like $70,000, like, that's kind of like peak optimal happiness and income. But I think like the new number a lot of people are saying is like 500 grand.
So you're thinking on a smaller scale. What I mean on a smaller scale is you're thinking...
That doesn't sound very small to me.
What I'm saying is 500 grand can buy you a nice house, can get you set up for retirement somewhat. But in terms of being happier in the sense that I just gave, the explanation that I just gave of helping other people, 500 grand can't do much for helping other people. I can do a little bit, but not a ton. Take my situation, for instance. I can buy people houses. I can set up, like I said, rehab facilities. I have the finances to do that. Whereas Jeff Bezos, he can fund an entire country to do whatever, right? So it's just different layers of how many people you can help. So if you want to set yourself up for retirement, yeah, a lower number makes sense. But if you want to make a difference, I would say the number to truly make a difference, I mean, it's out of the millions, I would say. I mean, you can really make a difference with a lot of money.
What about for you, Trey?
I think Ian's got like a broader idea of it. For me, I kind of take the question more of just like your own personal life. Mm-hmm. And from that standpoint, I think if you're making, say 100 grand a month, you kind of get to a point where there's not a whole lot of things that you want that you can't have. And for my wife and I, we reached a point where we kind of felt like we already hit that and there wasn't really anything we needed more money for. I did have a broker talk me into the idea that flying private, I was talking about this with Ian recently, would be something that we don't really normally do, but that he thought would be a step up or something that we really appreciate. I thought, okay, well, I could see like you skip security, all that. We tried it. She hated every minute of it. I loved it because we just pull up the car, hand the keys to the guy, climb on the plane, they load our bags and go. And we were going to Disney World, and I brought my friend and his family along too. And I thought it was really cool. We took some pictures. The pictures look cool. My wife was climbing the walls. She already has a fear of flying. So the fact that this wasn't a commercial aircraft with like a commercial pilot in her mind just felt like super unsafe to her. And she was freaking out the entire time. When you see her later, if she comes, then you can ask her about it. But she was miserable. So we actually canceled the charter on the way back and flew back commercial because she was that miserable. And that was really the only thing left I had come up with that like we couldn't just do if we wanted to do it as far as things that we want. I'm sure there are people who want more expensive things than we do. But for the things that we enjoy in life, I think at $100,000 a month, you're already there.
That's fair. I've flown private once, and it was honestly really nice. So from what people say, like they say, oh, once like you fly private, you can never go back. I mean, I would happily fly private again. I have no problem. Like I've never flown first class. I only ever book economy every single time I travel. The only problem that I had with flying private was the seating was kind of interesting. So it's not like a standard plane where like everyone's facing one way. It was flipped. And so I was facing Ben Mala. And you think I really want to look at him sleep for a 2-hour flight? Absolutely not. Absolutely not. Especially because they had little snacks. I can't snack while I'm looking at him sleep. So that was pretty.
That's messed up.
That was pretty. I mean, yeah, his mug looking at me. Oh man, it was. I think he even kicked off his shoes, and we had to like open up the windows in the plane just to air it out. Why do most real estate investors fail?
I think it's that they have the wrong mentor.
So everything to you is mentorship.
Oh, 100%.
Absolutely. I mean, I think, just the other day with my son, I was giving him a hard time about tying his shoes. I'm like, dude, you're 10. Are you seriously? Because we're at the doctor's office. He had to take his shoes on and off. I'm like, why is it taking you so long to tie your shoes? Come on. And he's like, well, Dad, Mom showed me, but you've never showed me. And I was like, ooh. He got me with that one. Like I didn't have anything to say.
I forgot Mom's so bad at tying shoes.
There we go. Exactly. I love, I should have said that. But no, instead I just like felt this overwhelming guilt. Like I'm a father. I haven't shown my son how to tie his shoes properly. But that's what I'm saying. When you have somebody who teaches you how to do something hands-on, it's kind of hard to screw it up. And when you don't have that, you can read all the books that you want. But at the end of the day, you're still going to go through this massive learning curve. And in the beginning, I had some good mentors and I had some not good mentors. And I think sometimes having the presence of a mentor that appears to know what they're doing, but who in reality does not know what they're doing, that's even worse. Because now you follow it as gospel and lo and behold, they're leading you in the wrong direction. That has happened to me and several people that I know for a fact, you and I know, that on the outside, it looks like they're massively successful. But in reality, a lot of the deals that they've done are doing very poorly. And part of the reason for that is the people that they were following didn't know what they were doing, but looked like they did. So having a mentor who's genuinely knowledgeable about what you're doing is key.
I couldn't agree more. I mean, having a good mentor made me. Graham having a good mentor made him. Like so many people were made because they listened to their mentors. So I couldn't agree more. If you guys want to become successful, find a good mentor, in any field that you want to pursue, or just find someone who's successful at something, which I also think is a very important distinction to make. You have, let's say, type 1 person. Type 1 will see successful people and become envious and angry at them because they have what they don't. And then type 2 people will see successful people and be like, wow, like what are they doing that I'm not? So it's like you have the victim or entitlement mentality, or you have the other mentality, which is like, let me do whatever I can and make sacrifices in my own life to be able to hopefully achieve what this person has achieved. I think that they are huge distinctions that can wildly create a different path for you on your life.
So, Jack, you said in the beginning that there was a little bit of a trade-off here where you were kind of helping us, with YouTube and some other aspects, building our audience. We were helping you kind of on the real estate side. I think a lot of people want to know both. In other words, young people that are coming up right now that might watch us or listen to us online, they're not just looking to know, once I have a lot of money, how do I go invest it? They're also looking at how can I make money? And they're really drawn to doing that by creating content, but they're not really sure how to start. How does one go about doing that?
So if you want to be successful in content creation, I think it's similar to what you said. Obviously, finding a good mentor would be the number one strategy, but generally speaking, content creators are more difficult to reach out to than real estate investors because real estate investors are everywhere and they're not public, so they don't really have people clamoring to get in a room with them. Whereas YouTubers, if you have 1,000 subscribers, you probably have 1,000 people that are probably trying to reach out to you on a daily basis. And so it's very hard to get a proper YouTube mentor. I got lucky in that sense that I found Graham and, we were able to develop a relationship from there. But if you want to get started and you're in the middle of nowhere or you just can't find a good mentor, what I recommend is make content that interests you. Look at who is making that sort of content and doing it successfully. See what they're doing that you are not doing, and then try your best to do your own version of what they're doing. There's so many things that go into creating a good YouTube video, but the primary thing that I do whenever I am trying to generate a good hook or generate exciting content that's very valuable and entertaining is I put myself in the shoes of the viewer, because I'm also a avid content watcher. I'm always watching YouTube, always watching Instagram Reels, just like chronically online. And so I do think that's pretty important. But what I do is I pay attention to when I'm interested in whatever piece of content I'm watching. So it's like, when is my attention maximally invested in whatever I'm watching? And when does my mind start to think about other things? And then I put myself basically in that body when I'm watching the content that I myself made and seeing when am I interested, when am I bored, and then cutting out the stuff when I'm bored and leaning more into the stuff when I'm very interested. So like, that's basically the basics, but it goes so much deeper than that. It's a mile wide and unfortunately also a mile deep. And so it's very, very hard to learn, and it takes years and years and years, as I'm sure you're aware.
Yep.
You said YouTube was easy. I don't think YouTube is easy. I think YouTube is extremely difficult, and it took me a long time to grasp a lot of the stuff that, makes a good YouTuber. But if you listen to those basics, then you should be okay, and never fail to pivot if whatever you're doing isn't working.
Yeah, when I said YouTube was easy, I meant barrier to entry.
Oh,
right?
Yeah.
Everybody has a phone. You are now a YouTuber. You're now a content creator if you have a phone. Where the barrier to entry to real estate, I mean, you need so much money, so much time, so much, everything. That's what I meant by that. Everything you said, I fully agree with. That's what was my answer. That was going to be my answer as well. Find a mentor. If you can't find a mentor through watching content. Figure out who you want to mimic and mimic them with your own personality. Figure out what you want to do that with your own personality. You don't want to be them, but you can be a version of them. That's how I started my career is, my first few videos, 30, 40, 50 videos, terrible, awful. And then I had the light bulb moment of these other content creators, they're successful for a reason. Why? It got to the point where I was mimicking their very personality in my own videos until I figured out, all right, I need to be myself, right? And that's the area of expertise is learning from someone else.
And YouTube is very generous. They will give you the data and analytics that you need to improve your content. And so they sort of, not really, but mostly tell you what you're doing wrong. If your click-through rate when you initially upload a video is 3%, change the title and change the thumbnail. If your average retention is 20% on a video, figure it out and make it more exciting. If people click off right in the beginning of the video, which they will tell you, then make the hook stronger. And so YouTube gives you everything that you need to make good quality content, as well as all of the other people in that space that are making content successfully. Look at them, look at the analytics, continue trying, don't overthink it, and you'll be fine.
How long do you think it would take a person starting out in content creation who really dedicates themselves to it, who follows the stuff that you've said, to get to a point where they could actually support themselves with what you might consider to be like an average lifestyle just off that content creation?
So the reality is it's going to vary by the individual. I do think to be a successful YouTuber, I think that you do need to be intelligent. I think very intelligent. I think you really need to be socially intelligent. That's 100%. You need to understand if what you're saying is funny or if what you're saying is entertaining. And if it's neither of those and you think it is, you fail. You're good luck, because it's going to take you a very, very long time to become successful at YouTube. So I would say if you have high aptitude and you're an intelligent person with decent social intelligence and a natural ability to entertain, it could take you very, very little time. If you're someone that struggles in social environments, or you overthink things, you have a poor grasp on what people like and what people don't like, it's going to take you a very long time. So it really just depends. And usually you kind of know what person you are. Dare I say.
For the people that you've seen pull this off, And really, this could be a question for you too, Ian, but, on average, the folks that you've watched kind of make it, and now they're just living off of their content creation. For those use cases, not everybody, but the ones that made it, how long did it take them to get to a point where they could live comfortably?
I would say usually a couple years.
Yep.
Yeah. I wouldn't say it's anything that typically happens in the first weeks, months. It's usually a couple years.
The internet, though, I've seen content creators explode within a few months. They hit the algorithm correctly. The algorithm is, we don't know. We can say we know what the algorithm is, but we have no clue. I've seen people come to the top and then fall just as quick. Within a year time frame, reach here and then all the way back down instantly. One content creator that I know that I've done videos with, during peak COVID, he hit 500 million views a month, and this was long form content, not shorts. Shorts, I don't think were a thing at the time. They were small. Shortly after that, the algorithm stopped favoring him and he dropped down to, I would say, 5% of that 500 million views. That quick, it fluctuates. So it is doable. And YouTube's algorithm, I've seen over the years, it favors new content creators because it's trying to constantly churn. They don't want people to get bored of the same old faces, every other day. So if you were going to start it, now is the best time to do so.
Yeah.
5 years ago, absolutely the worst time. They were favoring the same faces over and over again. But today, 100%. As you can see on our TikTok that we just uploaded, it's a brand new account. Our first TikTok has 1 million views. Whether it's my face or not, doesn't matter. The algorithm is favoring a new account. And I see that across social medias.
I do agree with that. If you do create a new account, then at least in my experience, they do try to push you out because they want to incentivize people. It's very hard to convince yourself to continue doing something if you're not getting proper yield. And so if you're posting a bunch and you do that for a few months, most people will be completely turned off and be like, I'm never doing this ever again. And so what TikTok, Instagram, YouTube do is if you're a new creator, you're a new account and you start posting, usually they give you a little bit extra leeway to give you that opportunity to get fed into the algorithm, to hopefully have the good retention metrics, to hopefully have the good click-through rate metrics, to actually grow and, become a successful creator. Like they kind of give you that handicap in the beginning. And if you don't have that because you've been posting for a very, very long time, it can be challenging. But also it's indicative of your character. Like if you tried something for several years, like 5 years, and you see no progress, realistically, it's not for you, or you need to completely pivot. You have no friend in your life that's telling you, no, don't do that. You need people in your life that tell you, hey, like you're kind of failing here. Let's change this up.
So Jack, a lot of people, when I tell them about iced coffee after meeting you and Graham, they check it out. And one of the first things that people say is, man, they have like an amazing group of guests on that show. You guys have some of the most famous people as far as the online community is concerned. For a person who's starting out, that's got to be a tough chicken and the egg situation, because part of how you get great people on the show is people check you out, I would assume, or their agent does, and they go, oh, wow, not only do they have a lot of followers and subscribers, but they also have a lot of other great guests that are of similar stature. So to solve that chicken and the egg problem, how does a new host trying to create content and build a business in the space, how do they start to attract some of those, I guess, more difficult gets as far as guests?
Do you know how much we paid for the most expensive guest on the Iced Coffee Hour?
Don't know.
$0. We've never paid for a guest on the Iced Coffee Hour. Do you know how much we've been paid for the richest guest we've ever had on the Iced Coffee Hour? $0. Never been paid for having someone on the show. So intend on keeping it that way. To get these people on the show, the most important thing is that you get views. And so we were pretty fortunate. We got started in podcasting relatively early. We've been doing it. This surprises a lot of people, nearly 6 years. And so we have a lot of data, a lot of metrics, a lot of views. We've been around for a long enough time where people can see, oh, these guys are serious. And so it's easier to pitch us than it is for a new aspiring podcast. I would say if you want to get people on your show, you really need to take advantage of clipping, because what a lot of people do, here's kind of like the hidden unknown truth, which is you can have a podcast that gets 500 views, and then you take, little vertical excerpts from that podcast, post it on Reels, post it on Shorts, post it on TikTok, and maybe one of them goes viral and you get 1 million views. And then maybe you do that and you make 20 clips from a 2-hour long podcast and you post them across all 3 social media. So you have 60 opportunities for one of those clips to go viral. And then maybe, other people clip it up for you and they post it on their own thing. And then amongst all of those clips, maybe it gets 5 million, 10 million views. Let's just say 10 million views because a couple of the clips went crazy viral.
Mm-hmm.
Then you can say to new people, oh yeah, like we get 10 million views of video. We personally don't do this. Like we say, when we're pitching people, we say, oh yeah, some of our best episodes have gotten over 100 million views. Our episode with Ben Shapiro didn't get over 100 million views, but all of our shorts combined with all like the full length episode combined with the audio listens, combined with the TikToks, combined with everything, got like 150 million views. And that's on our platform only. Then everyone else has clipped it up too. And that's gotten tens of millions of views. So Ben Shapiro, for 2 hours of his time, got hundreds of millions of views of exposure for 2 hours of his time. Now people go to the Daily Wire, they subscribe to his platform, he makes a bunch of money for it. And so what a lot of people do is they make sure they're on every single platform, they repurpose the content as much as they possibly can, and then they sum up all of those views to deliver as one neat package of just overall exposure to someone that likely has something they want to promote, whether that's a digital product, digital service, or it's, a book or, a newsletter or whatever. So people just want exposure.
How did you physically get in touch with those people? It's not like you have some magic book that has all these celebrities' cell phone numbers in it. DMs. Okay.
Oh, we get DMs from a lot of people at this point. Now we're really lucky. Like we'll have people reaching out. We had Stable Ronaldo, who's like a really, really popular Twitch streamer. He just randomly hit us up. He's like, hey, I saw your podcast with Mike Malak and I thought it was really good and I would love to come on the show. I'm like, this will make an amazing episode. Absolutely. We have him on and then maybe we have someone else from FaZe on. Then maybe we have FaZe Rug on. And then because we had FaZe Rug on, maybe we have this person on, this person on, this person on. And so once you take advantage of every social media platform and you have your clips in every nook and cranny on the internet, most people will see it. I mean, we have, I would say probably well over 2 billion views since we've, been on social media. I don't even know how many realistically with all of the people clipping it up. So people know about us, generally speaking. If we maybe they've just seen our face, maybe they just heard our voice, maybe they don't recognize us whatsoever. But that also helps. And just having some random people, like if we have 2 billion views, realistically, some A-list celebrity has seen our face. Like Elon Musk one time, he reposted one of our clips on his Twitter.
That's cool.
That actually happened twice. How crazy is that? So Elon Musk has seen my face.
Wow.
Would he come on the podcast? No. I would say he would, very confidently, he would never come on the podcast. Maybe someday, but yeah.
Never know.
So I think that helps.
Okay,
it's just,
cool.
It's all about marketing. And I do see a lot of like smaller podcasts that have just gotten started. Like Jack Neal, he's another podcast. He didn't just get started. Like he's been now, working on it for maybe a year or so. He's getting on amazing guests because he has a beautiful media kit. He sends to these people that he wants to come on his show. He has all of the data, all of the analytics. He doesn't get crazy views yet. He does get really good views, but he takes advantage of clipping so well. And so we can say, oh yeah, 50 million views an episode because, a few TikToks blew up. So very, very smart guy.
So leveraging the clipping, the shorts, getting more views, and then having a great media kit to tell that story.
Mm-hmm.
Okay.
That's essentially, how it's done. If you had to go back to $0 today in 2025, how would you make $1 million?
$0. Oh, man. The easy answer is commercial multifamily real estate. Huh?
I feel like you would create a YouTube channel.
Yeah, no, I agree. I think YouTube channel, I would, you have $0. Start a YouTube channel. You have a cell phone, start a YouTube channel. I think that's a good way to bring in revenue. Look at Ryan Trahan, right? He does YouTube and he runs around doing Uber Eats and stuff like that. Makes good money doing that. Trey, what do you got?
Gosh, I think I would probably pursue learning more about AI. When I was in school, that wasn't really a thing. And I think just about anybody, if they put effort into working the system, whether it's through FAFSA or through all the different other grants and programs out there, you can find ways to get, help getting through college. And I think that when I was in college, I went finance. I wasn't sure what area of business I would wind up in. If I had to do over again, I would go computer science with a focus on AI, because I think no matter what industry you want to get into today, including the one that we're in now, there are people innovating in real estate today, utilizing AI in ways I don't fully understand. And so I think that would be something that not only you could make a lot of money building a company around AI, but it also will augment whatever businesses you may own or investments you may have in the future, knowing how to apply AI to that platform.
Do some research into what career fields provide the highest income and then learn that skill and master it and then do it. That's what I would say. And that would get you a good starting point. And then after that, you can start investing, compound interest, get into bigger investments and go that route. But figure out which skill provides the highest amount of income and then pursue that with a lot of, intentionality.
Okay, be honest with me right now. What's the best part about being rich?
Well, I saw this thing recently with Ben Affleck, and he was like, in most areas of life, absolutely not. It sucks. It doesn't make anything better at all. He's like, except one thing that I can think of. And he's like, that is going to Disney World. Because if you've ever had to wait like 5 hours in line for a 3-minute ride versus just zooming like right to the front, he's like, that right there, that's a privilege that, might make it all worth it and all the bullshit that you have to put up with. And it just kind of resonated with me because I remember thinking when we went to Disney World, I've been both ways. And we did the whole VIP tour thing where we could go ride, what's that one, Avatar? We rode it like 4 times in a row without waiting in line at all. So there was zero. We just rode it, got right back on, rode it, got right back on, did the whole thing, which it was, to me, the best ride I've ever been on in my life. And then I saw that like the wait time by the sign that was posted was like at the time, like a 6-hour like wait. So to ride those 4 times, we'd have had to wait 24 hours or something to be able to do what we just did in like a half an hour, having a great time with the kids. So like I have to pick like an experience out of my life since I've had money that made me feel most like, man, all this hard work was worth it. That would be my number one, because people are out there just sweating their ass off in line for all these hours. I mean, our kids didn't just go to the Lion King show at Disney World. They were in the Lion King show at Disney World. So it's a little bit different level when you have access to that. Most of the other stuff, I mean, you get over the cars and the watches and the houses after a while and they're cool, but you kind of realize after a while that that's kind of all bullshit. But it's not bullshit to be able to do things like that with your kids, because they may not even remember it all, but my wife and I always remember those memories of having that experience with them without all the stress and the frustration that other families were enduring.
What's the best part about being rich?
I mean, not having to worry about bills. That's always nice. For me, I always go back to, and it's such a, feel good answer. But for me, it's just the reality.
Helping people.
Helping people.
I know you. And that's beautiful because
I don't know, dude. I don't know. For instance, up until moving here, I lived in a trailer, right? I'm a multimillionaire. I lived in a trailer for 5 years, a 2,000 square foot mobile home trailer, right? I don't really care about the big extravagant things. The house that I live in now is a little bit over the top, but I don't care about it. I like helping. I like helping people. And that's why I want to build something bigger so I can help more people.
So what's the most lavish thing that you bought for yourself when you were living in a trailer?
Probably a truck.
How much did it cost?
$100,000.
And what was the most expensive way that you've helped people while you were living in a trailer? Bought
family members' houses, started the drug rehab center, started a church, gave the church, I think it was $800,000 for a church. I don't know. I mean, I try not to keep tabs on everything, but when I get asked questions, I try to answer it. But my goal is to help. That's my end goal, is to help as many people as possible.
Do you think that you need to help yourself before you can help other people?
Oh yeah, 100%. If you're not in a place where you can help other people, you're just hurting yourself by helping other people.
And how do you know you're in a place to help other people?
Whenever you look for something, you're going to find it, right? So if you look to help people, they're going to come out of the woodworks and they're going to start presenting things. Hey, can I, for instance, I wasn't looking to help people. I mean, I was, but I wasn't directly asking individuals, how can I help you? But just happenstance, there's a guy who is part of our small community and his house randomly burns down. Well, I'm able to help in that situation. So I cut him a check for X amount of dollars. It changes his life, fixes everything he's going through, and now he's back on track. So it's just being able to do those things. When you're looking for things, whether you want to call it the universe or you want to call it what I believe in, these things find you. And when you're willing to help, more things will find you. And then more opportunities will come out. And you'll start to build this system of, I help this person, and then something good happens to you. And then you can help more people. And it just constantly grows on top of each other. And that's how I operate. And that's why my goal is to help.
So you're already rich, but do you want to make more money? If so, how much?
I don't have a specific goal about how much more money that I want to make, but I do feel like coming back out of retirement, I'd like to accomplish more than the first time out and just see if I can turn more properties around, have a bigger impact. I started buying properties as a way to build wealth and kind of discovered that in the process of doing that, I was turning all these low income communities around. So I didn't start out with like that noble intent of let me give people a better place to live and change their lives for the better and help kids. But somewhere along the way of pursuing making money from doing that, I discovered that the most efficient way to make money with these properties was to buy these rundown properties that have rampant crime and all these issues and turn them around. That's the way to make them have the biggest increase in value from when you buy them to when you eventually sell them. And now what I realize is that getting back to it, imagine how many more of these properties I could buy and turn around and have an even bigger impact. So I'd like to go out and be able to do that, maybe 10x the amount that I did before.
So for me, I don't know why this number has been in my head for the past few years. It's a pipe dream and it's insane, but it starts with a B. I don't know why. It's crazy. Me thinking that, that $1 billion mark is, well, this guy's an idiot. Why would he ever think that's achievable, right? For whatever reason, that's in my mind swirling. Where, I like what Brandon Turner says. Real estate investing without losing your soul. That has a strong kick to it because I'm not going to say a lot, but there are investors, there are real estate landlords that treat their people like trash. They walk all over them and they take a lot of money doing so. I want to do it differently. Not only do I want to make a ton of money to help people outside of real estate, I want to make the real estate like, what Trey has done 10 times better for these tenants, make their life so much better. So they look forward to living in this place. They want to bring their family in to live because it's safe. It's a great place to live, which is what he's done 21 times successfully. So for whatever reason, that number's in my head. I have no idea why. Is that going to come true? Most likely not, but that's, you asked the question, so I'm answering it.
What's the best piece of advice you've ever received?
It's very cliche, but don't give up.
I think some of the best advice I ever got, my mentor, and I've had several mentors, but Emery Jacob, when I first got in the apartment business, he really took me under his wing. And I was realizing, man, this is going to be, being new to this is going to be a lot. Like I'm going to be working on top of the business that I owned and the job that I also had at the time. I realized I was going to be working around the clock on top of that on this business. And I realized I was going to put some things off, like starting a family, stuff like that. And what he said to me is, you pay now or you pay later. And his argument when he kind of explained what he meant was some people work really hard early in life. And then when they're older, they get to enjoy the fruits of their labor. Some people want to kind of play and have more fun when they're younger and not worry about it. But then those are the people that a lot of times have to struggle, when they get older. And oftentimes if they want to have a family, their family pays for those choices as well because life is much tougher without resources. And so his argument of just pay now or pay later, I thought, well, I'd definitely rather pay now than pay later. I have more energy, more time, more freedom when I'm younger. Not that I am today, but what I was at that time when he gave me that advice 20 years ago. And it kind of made it easier for me to accept that I was going to work more than all my friends, that even though I got to a point where I was making more money than all my friends that were my same age, that I wasn't going to enjoy it as much as they were enjoying life because I was going to be working. I was going to be working evenings and weekends and holidays. But I look back and I'm so happy that I did, because then when I did start a family and move to the next phase of life, whether we had more money or not was never going to dictate our choices. And it doesn't dictate where my kids can go to school or attend college or their ability to start a business one day, because I did that work when I was young.
That reminds me of the concept of choosing your hard. It's essentially just another way of saying that, which is like, let's say someone is addicted to cigarettes. You can choose the hard life of continuing to be addicted, or you can choose the hard life of trying to get off of addiction. So, both paths are not glamorous ones, and they're both going to be really difficult, and you just have to pick which sort of hard life are you willing to choose.
So again, thank you guys for coming out. Thanks, Jack, for helping us with our first video. We have a lot of plans for this channel, a lot of fun stuff in store. We have a game show coming out soon, hopefully.
Yeah, I think you're definitely going to be eating some peppers in that thing by the end of it.
That's not happening.
They keep trying to change it, but I believe you can do it.
I was surprised to know that he only ate steak for 2 years. Did you know that?
I did, as a matter of fact. Yeah.
That's just
ribeye specifically.
If you're going to eat steak, I suppose ribeye is probably the one to go, but yeah. That's crazy. 2 years of ribeye only.
Anyways, thanks for coming out.
Thank you guys.
Do the likes, do all the things. We'll see you soon.
See ya.